Well, looky who it is. Not that I'm really that surprised. I was expecting you. I'm John Zidar. This is On Top and Hot. And today is Wednesday. It is February 5th. I like Wednesdays because I get to talk about hot penny stocks. I'm a day trader. I primarily trade stocks under $5 every day. And I'm constantly looking for a hot penny stock. One that has heat. One that has potential to make us money. And I've got one for us today, folks, though it is a bit unusual. First off, this has two opportunities with it. If things go really bad, we could make a lot of money. We could double our money. Yes, we could. And if things go good, we could make some money. I'm going to explain that to you here in a minute. Now, what makes this interesting is that we are looking at a SPAC. Bowen Acquisition Corp, ticker BOWN, is a special purpose acquisition company. She's up on the major exchange. Oh, you don't know what a special purpose acquisition company is? Let me break that down real quick for you. It is a bunch of investors that come together to secure a ticker on the major exchange, like buying a plot of land. They don't have any business, they don't have any revenues. All they're doing is securing a ticker. Then they're going to go out and look for a deal. They're going to try to acquire a company, do a merger, something like that, with a company that's either private or on a lower exchange that wants to get onto the major exchange. Now, they have no idea who they're going to be merging with when they come onto the market. They might have an idea what sector, but they don't know who they're going to merge with. And we don't either. But they start selling shares for this merger deal that's going to happen in the future as speculative shares, and they go for $10 a piece. Now, follow me here because this is the important part. The entire time that the stock is on the market, up until the time they consummate and close a deal, the stock is worth $10. Now, we can bid it up, we can bid it down, but it's worth $10. The reason for that is SPACs have a time limit for how long they have to get a deal on the table. They just can't be out there forever. They get normally 18 to 24 months. If they do not succeed, if they do not cut a deal, consummate it, and close it within the designated time period, you ready for this? They have to give back all the money to the investors, including me and you. And the easiest way to do that is to know what each share is worth. So they just say it's worth $10 up until the time of the closing of the deal. So when these companies would get news about a deal, the stock really wouldn't move. Maybe a little bit because we can move it, but it's always worth $10. It would be the warrants, the penny stocks that got all the attention, and they were running hard. Well, this company doesn't have any warrants, so we don't have to worry about that. Well, the company is at their 18-month mark right now, and they have just had news come out about a merger, and the stock took a hard fall. A hard fall, and I really don't know exactly why it fell. I just see the opportunity it presents us. So let's go through the details and I'll show you what I'm talking about here. Bowen Acquisition Corp finished the day. Well, she ain't finished. She's getting some aftermarket activity here. Currently, she's at $4.49. I've already seen her up $5.21 after market. Currently, she's up about 8%. She's jumped 33 cents so far. This is a hot penny stock on the major exchange. She's on the NASDAQ, which comes with benefits compared to those penny stocks on the OTC. First off, all of your transactions are free on the major exchange. You get to trade pre-market and after-market. You never get to do that with OTC. There's a lot more money and a lot more volume and a lot more rules up on the major exchange, and all of those benefit us, the investors. So Bowen is a shell company. She hasn't got any business. She's not making any money. She is looking for a company that is making money who wants to be on the major exchange. And they seem to have found one. Let's jump into that news. We're jumping over here to my favorite news site, Stock Titan. I use this for news as well as a scanner. They've got the information up at the top. But let's dive into the news. This news particularly came out on the 18th. But you're going to see, looking at the chart, that she started to fall on the 13th. Well, the closest news to that is them separating their shares and their rights. They sell units. It's a box deal, a package deal, and you get shares and warrants together. or you get shares and rights together. And then at some point, they allow you to open up the box and you can sell each one separately. So they did that on the 14th, but the price was starting to fall on the 13th. And the closest news to that is back in July. So I think somebody knew something. I'm not quite sure why it fell, but that's the history there. So let's take a look at this news. Bowen Acquisition Corp., the SPAC, announced the execution of a merger agreement with Shenzhen Qianzhi BioTechnology involving the exchange of ordinary shares and additional earnout targets. So the companies themselves, Bowen Acquisition and Qianzhi BioTechnology, have consummated the deal. They have done their part. The transaction is expected to be consummated, there's that word, in the second or third quarter of 2024. So it is not closed yet. So the stock price is still worth $10. This is subject to regulatory and stockholder approval. Qianzhi Biotech is a health and wellness-focused biotech company based in Shenzhen, China, specializing in ozonated health and wellness products. The combined company is expected to remain a NASDAQ-listed public company trading under a new ticker symbol. So everything is done as far as the companies are concerned. But now we've got a lot of governmental agencies to deal with because it was actually a subsidiary of Bowen's that did this merger. Bowen is a U.S. company. Their subsidiary is a Cayman's company, and the company they're merging with is a Chinese company. U.S. and China cannot do deals together, but Cayman can do deals with America, and she can do deals with China. So that's how these deals are coming together. So everybody in that chain of government agencies has to approve this first. So that's the last thing we are waiting for. Now let's get just a little more information about this company. I went around, did a search, couldn't find any information. Looked for pictures of their products, couldn't get any pictures. This is about as much information as I got, and this is in the news press as well. Qianzhi Biotech develops and sells ozonated products for skincare, antibacterial, gynecological, and andrological uses. Qianzhi Biotech also produces ozonated disinfectants that are cured at ambient temperatures. The company claims these disinfectants are safer, more environmentally friendly, and more efficient than traditional disinfectants. And as you can see here, they tell you that they have a deal going on with Bowen. So that's all the information I've got. I can't find anything else. So let's get the information around the stock right now. We don't have any more information on the companies. We got the two merging. They've done everything they can do. Shareholders have already approved it. I've already gone through the filings. There were a lot of filings to be looking at. I was just trying to figure out how many shares are involved in all of this. But I did see that they had a shareholders meeting, had lots of proposals. They approved them all. Everything is a go on their behalf. So all we're waiting for are the government agencies to approve this. What was the relative volume around the company today? Okay, she was hotter than normal, but still way, way under the radar. We're on the major exchange, and she's been doing 28,000 shares a day as an average over the last 30 days. Today, she did a mere 127,000 shares, which is 4.5, 5 times as many shares as she was doing. So it is more, but that is way under the radar on the major exchange. Share structure. I went diving around, trying to figure out what was going on here. Now, the company that's coming onto the major exchange doesn't have any shares as far as I can see. It's a private company. So the only shares involved are this company's. Well, as far as I can see, this was the maximum number of shares ever put out. They say they have 200 million authorized. They could put that many out. They could use that for deals and other things as well. But going through their financials, it looks like there was a lot less than that. And they say that between 6 and 7 million shares can be used as part of this transaction and will be subtracted from the outstanding share count. So I don't have the figures, but the bottom line is all of the numbers are under 10 million. And if they take away 6 to 7 million shares, it's going to be a super duper low float under 5 million. So I don't know what the float is. I know it's under 10 million, could be under 5 million. So it's an excellent float. Market cap currently, they tell us here we are at 38 million. There is no money to look at. The company is a shell company. They don't have any revenues whatsoever. And there is financial information in one of those filings for the company. They have to reveal that to the shareholders before they can vote. So I do know it's out there. I have not gone through them. I don't know what they're making because I really wasn't interested in that part of this. And as I said, there are a lot of disclosures, folks. When you have merger deals, especially when they're international merger deals, you have a lot of forms. So there's a lot of information here. You see all these SC13Gs? Those are new investors coming in. Big investors who become partners in the company. They buy so many shares, they actually own a percentage of the company. So there's a lot of information we can get from here. But the big information is the chart. And I'll fill you in on all the rest of the details when we go over there. Well, let's go. Welcome to my playground. This is Thinkorswim, my free trading platform from Schwab. We are looking at ticker BOWN. This is Bowen Acquisition. Got her opened up to a 2-year, 1-day chart so that you can see her from the very first day she came on the market, which happened to be August 17th, 2023, about 18 months ago. She came on at $10, and 18 months later, she's up to $11. She was climbing slowly but surely all of that time, even though the stock is only worth $10. Now, she plummeted right here, right after hitting that high on the 13th. I don't know why she fell. The news that came out didn't hit until the 14th and the 18th. By that time, she was already in a full-fledged fall, so I don't think that had anything to do with it. She went from $11 to an ultimate low of $3.80, and right now she's bounced back to about $4.50. Let's take a look at our 4-hour view. Pretty much the same thing, except you can see that bounce back, right? You can see she came down to that low, was underneath the 9, and now she's pushed herself right up towards the 9. She isn't on top of it yet, not on the 4-hour chart. Our oscillators are all starting to go flat right now, but here's the good one. Right here, folks, our ADX, our green line is just crossed over the red and starting to climb. So we do have an uptrend on the board. Let's come on down to our 1-hour view. So you can see our drop here. We were at $11. She dropped from there down to $6.35. And she was there for about 2 weeks. Then she dropped again down to $3.80. And off of that low bubble, she is starting to bounce and recover. She got up on top of the 9. You got to be on top of the 9 if you're going to climb. And she's trying to get on top of this 20 right now. All of our oscillators here are in recovery. Everything has already hit the floor and is now starting to bounce up. Looking at our ADX, we got our green line on the top. That is our dominant trend. And the yellow line tells us how strong that dominant trend is. The higher it is, the stronger. The lower, the weaker. We got some strength in an uptrend right now. Our MACD is climbing. We just had a positive crossover there as well. And our RSI is heating up, but it's still a bit cool. It's down there at 50. Let's take a look at our 5-day, 15-minute. So 5 days ago, we were at a high of $7, hit that low of $3.80, went sideways for about a day, got across that 20-day MA. Once she got close to the 200 haul and the 50 MA, she got excited. She jumped hard and successfully landed up on top of everything. She's on top of the 200 haul, the 50, the 20, and the 9-day, ready to climb. She just needs to get to that 200 now. And she is primed to do that, folks. Sitting on the 9-day above the 50, which is now going flat, and our 200 haul, which is just about ready to go flat. As soon as that 200 haul turns up, folks, I promise you, there's an 8 out of 10 chance this thing is going to push the price to and through the 200. So you're looking at a jump here from roughly 450 up to 650. That's just from this setup right here. My point is, I think we are in a good position regardless of which way things go here. She could fail miserably. One of the government agencies could say, no, you can't do the merger, and that's it. They don't have enough time to come up with another one and close it in time, so they'd have to liquidate. We would get $10 for every share we buy. That's doubling your money. If they do succeed with the merger, chances are she's going to go back at least to $10 and probably further. So we double our money there as well. Then you've also got to consider there's a lot of investors out there like me who do know that the stock right now is worth $10 because they have not closed this deal. It is not consummated. I do realize that SPACs act like this when a deal is closed. I'm over there at pennybois every day. I trade with the public and my team members, 50 to 200 people every day, and we're looking to take gains every day. And these last few days, we've played a few SPACs that just closed deals. And contrary to what you think, they don't celebrate when the deal closes. They crash. It looks just like this sort of chart does. As soon as the deal closes, you see a big drop in the price. We were just playing one. It was RFAC, ticker RFAC. She just closed her merger. It was at roughly $10, and it fell down to 58 cents. It started to come back just like this one did, and it was up near $3, $4, $5, somewhere around there, and then she started to run. Well, today, she took off from that point and went over $15. We have had a couple SPACs do that. They crash after they close the deal, and then they find a floor and bounce, hit that $10 mark, and rip. The difference here is this company has not closed the deal. I think some people think they did and jumped the gun a little early. So investors who know that this stock is still worth $10 right now may jump into it because they realize there's not a lot of losing positions. She would have to fall from this point. And even if she falls, you're going to get your money back because she's probably liquidating. That's why she's falling. So I think this is a very unique opportunity, folks. We can actually make money one way or the other. The only problem I have as a day trader is if I'm waiting for her to liquidate, that could take a few months. They're not planning on closing this deal until second or third quarter. And if they fail, that could be fourth quarter before they liquidate. I don't want to tie my money up that long. But maybe you do. Maybe you've got some spare change you can just toss over there. If the company rises, you got some money. If they fail, you know you got some money. Either way, I think it's an interesting play. And you probably weren't aware that there's a money-back guarantee with SPACs, were you? Yeah, see? You learned something. You may not be interested in the stock, but you got some good knowledge there. Remember, folks, the more you know, the more you're going to grow. See you, folks.